The numbers look great for the third quarter. Another very strong performance, although it has to be said the market's probably reaching a plateau now. $60 billion of transactions taking place so far this year. We predicted total volumes of 68 billion for the whole year, so I'm pretty confident those are going to be exceeded. Factors driving the activity, the growth in tourism across the world. If you look where the activity is taking place, it's still the US is the key market. 50% of the transactions across the globe will take place in the US. The one good factor that supports the US is the refinancing market. Banks are still very confident about the future of the lodging industry generally. The focus on London and Paris is as strong as it's ever been, but it's hard to find assets there. So we've seen investors looking outside of those two key capitals, really driven by RevPAR growth. If you look at Liverpool, Birmingham, these cities are showing higher RevPAR growth than London is at the moment.
Well, over the first half of 2015, we witnessed around 11,000 keys traded across the Asia-Pacific region. We also saw a moderation in total sales activity, falling by around 15% to $3.2 billion. But that was largely the result of a noticeable reduction of investment stock in Asia and a geographical shift of focus to recovering and emerging global markets by investors. But despite that, we still expect to achieve our 2015 Asia-Pacific forecast of $8.5 billion. And that's based on a much stronger second half, led by landmark deals in Hong Kong, Japan and Australia. China's continued buying preference still remains very much outbound focused. One key destination that has most benefited from this flow of capital is certainly Australia. The emergence of Chinese investors has been a key feature of the Australian hotel market.
There have been a lot of commentary about what is taking place in China at the moment. In 2015, we're not seeing any difference in attitude from Chinese insurance companies and some of the larger conglomerates. The stock market hasn't had a negative impact on their appetite for investing outside of the country. Into the future, much harder to predict. We may see a slowdown in demand during 2016.